My name is Kevin, and I'm a Canadian CPA. What I want to talk to you about are the benefits of a family trust. Now, over the last 5 or 10 years, there's been quite a number of changes that have been made to the family trust rules, tax rules, and I know that there's a lot of people who are wondering if it's even beneficial to have a family trust anymore. What I'm going to cover in today's topic is whether or not it is worth having a family trust. And I will tell you right now, there are 3 main reasons you're going to want to consider having a family trust. First reason is to be able to purify your corporation. Now, what exactly does purify your corporation mean? That means you want to get your company ready so that when it comes time for you to sell the shares of your company, you will be entitled to upwards of $1,250,000 tax-free. We also refer to that as the lifetime capital gains exemption. Second reason that you may want to consider a family trust is the ability to multiply your lifetime capital gains exemption by the number of beneficiaries that you have in your family trust. So for example, let's say you have a corporation and Mr. is the only shareholder in the company. And let's say that Mr.'s corporate shares qualify for Mr. to receive $1,250,000 tax-free as his lifetime capital gains exemption. If we introduce a family trust into that corporate structure, and if we make his wife, and let's say they have 2 kids together, and we make the 2 kids beneficiaries of the family trust as well, what we have done is we have now multiplied the lifetime capital gains exemption 4 times. Meaning we've gone from 1, which was only Mr., who was the shareholder of the company, to now 4, which is Mr., Mrs., and their 2 kids. What does that mean in dollars? That means that instead of being entitled to $1,250,000 tax-free, that family group is now entitled to $1,250,000 tax-free for each individual. That's for Mr., Mrs., and their 2 kids. So now what we've done is we have moved the initial $1,250,000 tax-free to $5 million tax-free. The third reason that you may want to consider a family trust is for income splitting purposes. Now, what do I mean by that? I'm going to give you a real example that came up in my practice a number of years ago. I had a Mr. and a Mrs., and they had 2 kids. And basically what Mr. and Mrs. were doing is they were funding their 2 kids' lifestyle. So basically what they wanted to do is they wanted to assist their kids in going to school, living expenses, and all that stuff. So what they did is they gifted their 2 kids $30,000 each. So a total of $60,000 after tax was needed in order to gift both of their kids $30,000 each. Mr. and Mrs. were in a fairly high tax bracket whereby that extra $60,000 that they wanted to gift, they actually had to withdraw $100,000 out of their company. On that extra $100,000 that they took out of their company, they had to pay 40% or $40,000 in tax. And then they gifted the residual, which is $30,000 for each kid, to their kids. What we did is when we looked at their fact pattern, we set up a family trust. What we were able to do is we were able to have the corporation pay a tax-free dividend to the family trust in the amount of $62,000. And then what we did is we had the family trust pay each of the kids $31,000 in dividends. Each kid paid roughly $1,000 in tax on that $31,000 dividend, and the rest was theirs. So basically what we did is we took the main objective, which was gifting the kids $30,000 each, that originally cost Mr. and Mrs. $40,000 in personal tax, and because we introduced a family trust into their structure, that same $60,000 that was gifted to the kids cost $2,000 in tax. So that was a $38,000 tax savings, and that tax savings is not a one-time deal. That's every single year. So as I said, 3 reasons that a family trust may be beneficial for you is if, number 1, you want to purify your company so that you are able to take advantage of the lifetime capital gains exemption, which as of today is valued at $1,250,000 per person. Number 2 is if you want to multiply your lifetime capital gains exemption by the number of beneficiaries who are in your family trust. And number 3, if you want to income split. Now, what I will say, for legal reasons, do not implement what I just talked about without getting independent tax advice. I have to be very clear, this is not tax advice. If you do want tax advice, click the link below and let's have a conversation and see whether or not we're able to help you save some money in tax.